And now we're using computer audio. And now, oh good, I didn't want to be joined by Gary. Gary the stuffed animal is not an adequate replacement. Hey everybody, welcome. Happy, what day is it?
It's Tuesday.
Happy Tuesday, everybody.
Tuesday.
I'll move over a little bit. There we go.
Okay.
It's nice to see you all here. I'm Rob Booker and
I'm Markay Latimer.
And this is the Daily Profit Publishing weekly educational webinar where we pull up some charts, we talk about some stuff. I would usually dress up for this, but I want to go paddleboarding today, so I wore my bathing trunks.
I think that's a great idea.
However, this is also, August is shaping up to be the best trading month,
It's
not
amazing.
of this year for me, but of like the past 10 years. So I thought I might share with folks kind of what's going on and the kinds of things that I look at. And then you could share some things that maybe you've been looking at. We might look at the broad market as a whole, probably take some questions and ask people how they're doing. We're super excited that you're here. We should probably give some stuff away.
That's awesome.
I don't know what we should give away, but we should probably give some stuff away. All right. Yes, so if Kelly, you are here, yes, I definitely would love to send out a link to the 1K Club on this session today. Yes, absolutely. That would be amazing. That would be fantastic. That would be great. I would love to do that. Okay. All right. I'm going to share my screen and I would love to take a look at Zoom. So folks, if you watch any videos that I've ever done over the course of the past month, I've been sort of a big proponent of betting against companies with just outrageous price to earnings ratios. And maybe we could just look into, the concept of price to earnings, PE ratio. Let me just look at the definition here. Take a second to pull that up. Price to earnings ratio is also known as the PE ratio, is the ratio of a company's share price to the company's earnings per share. And Zoom has a price to earnings ratio of 1,503. If you look at something like IBM or 3M that actually make money, they have a price to earnings ratio of 14 and they have actual revenues. They have actually billions and billions and billions of dollars of revenue. And I'm not saying that Zoom is terrible. We're using Zoom right now. But here's a lesson for today in our session here is that if you get into the habit of looking for companies that are well run, that have earnings, and then you look to buy those companies when they fall, you are setting yourself up for success. And that's the kind of the only rule you ever need. Me, being the rule-breaking, rebellious, subversive personality that I am, I like to look for companies that don't have very much earnings or are wildly overpriced. Is Zoom going to make 1,500 times its current earnings per share in the next 2 years, 3 years, 10 years, 20 years even? It's unjustifiable. Even if Zoom is a long-term great company, it's not Amazon. It's not going to branch out into all kinds of other things. It's just not justifiable from a fundamental standpoint. It's just too high. And so I waited for a chance to sell it. And finally today, all of that hard work and effort paid off. And all of those put options went into profit. And I guess the only thing I wanted to mention here is that there's convictions and arrogance and pig-headedness that's not successful trading. But then there's, I'm willing to risk $1,000 to make $20,000, and I'm not changing my mind even if everyone in the world thinks I'm an idiot. And that was this one. It never really went any higher. It only went sideways, and then today it started to break down, and it is most likely on the way to $210 a share. That's just an old trend line that you see on the screen here, and it's, there you have it. So that's Zoom. This is one thing that I do. I do it with a number of companies. I did it with Pinduoduo. They're reporting earnings now on August 21st. This is a company that is a Chinese company valued at $73 billion, and they have negative $1.13 earnings per share. They've never made money. They lose 11 billion yuan every year. Like they just lose billions of dollars every year. But their stock has done nothing but go up because it's an e-commerce stock in the midst of the crisis. And eventually, like you got to either show up with some profits or you're going to get hammered.
Which
So,
I love this because the technicals started to look bearish, right? Even
Yeah.
before these stocks broke down, they all have double tops, they all have resistance levels that we're holding. And so that is kind of, you take that technicals going from really bullish,
right.
but you knew all along fundamentally it shouldn't have been there. And then the technicals start to change and then you get
Yeah.
then the final breakdown, which is awesome.
It's interesting to talk about that too, because the trade, the best trades that I take never look good when I take them. They never look like the right trade to take. So for example, a company that you've done really well on, well, you've done well on a lot of them, but I think, did you do Etsy? Like when Etsy was dropping to, it was retracing in the
Right.
midst of an upward trend, you got bullish, but it looked like it was crashing. It's like the best trades never look like the
Yeah.
right trade to take.
It's true. Well, it's true because by the time things look like the best trade, then the move has already happened
Mhm.
and you see it too late. And so that's the point I think of technicals, is to try to find those patterns and get in early.
Mhm.
And then you add that next piece with the fundamentals to it as well, which is amazing.
Yeah, absolutely. So that's Etsy. I mean, you've also done this with Apple.
Yeah.
Like on the days that you buy Apple or you get interested in Apple, it's crashing and people think that you're out of your mind.
Yeah.
This is pretty funny.
It's
pretty
amazing.
hilarious. Overstock, I looked like the biggest idiot in the world, but it was $2 back in March. It grew 50 times. To like by August 1st, it had grown 50 times. It had 50 times its price. That's insane. That's Overstock. That's absolutely 1000% insane. By the way, their earnings per share are negative $1.17. Like this doesn't make any sense. So when it started to look bearish and I started to think about selling it, every single human on the planet that I know is like, why would you sell a stock in an uptrend? But the best trades never really actually look like they're good trades.
Yeah.
If it looks like a great trade to everybody else, it's probably too late.
Too late.
So anyway, those are just a few thoughts that I wanted to share today. What do you we have your chart set up right here. We can look at things the way that you like to look at them.
Okay. Yeah, I'm watching tech because we know big tech has really driven the rally. Well, big tech and then online stuff. So I've been
Yeah.
watching tech and some of these, like, here, can I switch it out? I mean, it's just always my favorite stock. I even dreamed about Apple last night. I'm not kidding.
Did you
Weird.
dream that you were shopping for Apple products?
Apple
by the way?
products, I was.
We had a conversation yesterday where you're like, Apple used to be great, and then Tim Cook took over, and you were not a fan of Tim Cook, and now you love the Pro line.
No offense, Tim. Sorry. No, I was sad. Like, Steve Jobs, love him or hate the guy, he really expected excellence out of his people. They didn't make little screw ups that
Yeah,
when Tim took over, there were a lot of missteps and it was weird. And yeah, the conversation was, I feel like Samsung took over and Samsung became more innovative than Apple, which was weird because they were the ones that really drove the whole smartphone thing. And that, back in the 90s, right? And that just, it shifted drastically, which kind of
Yeah.
made me sad. But,
Yeah.
I mean, I love Apple. I've probably made more money trading Apple than any stock.
Mhm.
So I just do have this love. Plus, I love the products. But now they've really picked it up again. Like for the first time, actually. Again, I'm proud to be
An Apple
owner.
customer.
Because their Pro line is amazing.
Yeah,
And I am more and more now hearing my diehard Samsung friends and family members that they will be buying the
Yeah.
new iPhone when it comes
Right.
out, or they just recently bought. Like every single person I know is now switching. So I feel like that is going to drive Apple. And there are a lot of other stories here, but they've got the split coming up, 4-for-1 stock split.
yeah,
Which-
that's crazy.
It is
So
crazy.
talk to us about a stock split, because I've actually been wondering about this. It seems like 20 years ago or 25 years ago, a stock split was like a guaranteed way to make money.
Yep.
You buy it, it splits, and then the stock goes right back to where it was before it split, and you have 4 times the money you had before. I mean, it seems like that's my memory of it, even though it's probably warped.
Nope,
Is that
you're
still
right.
a thing?
Well, I don't know because nobody has been announcing splits. It's been years and years. And in the 90s, it was like I wore a pager to announce, to let me know when there were stock split announcements, because we would jump on.
Paging Dr. Latimer, paging Dr. Latimer. Your money is waiting. Yeah, right.
So we would jump in,
Yeah.
and that was the coolest trade, a stock split announcement. You buy the stock or options on the stock, call options, and the stock runs, and there are little dips. There's a pattern. They kind of rally and dip and rally again. But it is weird because the stock split doesn't change a darn thing about the stock. In fact, if anything, it dilutes the stock. And you look at, quick example, Microsoft, they split and split and split and split in the 90s. And then when we had the tech bubble burst in 2000, Microsoft's stock for 13 years lagged and did nothing.
I remember it was in the 20s
forever. It was flat and the most boring stock on the planet. And no joke, I live in Seattle, and my friends that, pretty much most people work at Microsoft or Amazon there. And they would call me and like, Microsoft was up 35 cents today. Really? That was a big deal. It was that flat.
That's the exciting news in their lives.
So it was that flat. But anyway, bring that up because they had so many shares of stock that it was really, really hard to move it. And then after 13 years of doing nothing, they've become, a really great stock.
Yeah, if you split the stock, earnings per share goes down, right? Because you have more shares, so earnings per share decreases.
And the float is bigger, so it takes more buying pressure, more selling pressure to move it. Right?
Wow, this is super cool. I love this.
It's fun. I love this as well because now you look at Apple. So let's just take this.
To the chart? Yeah, what happens to the chart?
So it splits. So it's going to be, let's say they close at $450, right?
Okay.
What's 50 divided by 4? Just carry the 1, 12, 50.
Oh, I'm just gonna let you do this. 150.
Let's do 400.
No,
whatever price they close at, right there before the split, they're going to be split down. It's basically stock price divided by 4.
Right. So it's probably gonna end up in the $100 to $115 range because this is going to vary between 400 and 450.
I mean, unless it goes to 500.
Yeah, exactly. Which, yeah,
I mean, you never know. We got weeks left.
Sure.
So, or a couple weeks, right?
Yeah.
But what will happen is, so let's, whatever it is, let's say it closes before the split. If you had 1 share of Apple stock, now you have 4 the next day, and the cost basis is split down by 4. So you have the same value. When you add up the money and the value that you have in Apple stock, that hasn't changed. And by the way, if you're, for all the option traders out there, your options split. If you have 1 option contract, it becomes 4 option contracts.
And the value of each of your buy gets, so if you bought them each, if you bought it for $10, you now have 4, and each of them originally now cost $2.50.
Exactly.
Oh.
Exactly. Yes. Your
it's also, is it suddenly cheaper? Is that another thing? Like suddenly Apple is $100 a share?
That is why after the split, these stocks, at least in the 90s, they had a tendency to go back up to their pre-split price. Because now think about, maybe even some of you at home, you're looking at Apple and you may want to buy the stock because they have this amazing Pro line and all the Samsung users are switching over.
Right.
But it's $450 almost, right?
Yeah.
So all of a sudden that next day, and it is just a psychological thing, but the next day you can buy it for a fraction of the price. So that is what attracts buyers, that then ends up driving the stock almost always up to their pre-split price and even higher. Now, this is a different market. They have fractional shares now, which I think, gosh, it might have been even Robinhood that started that. But all the brokers now, you can buy pieces of a share of Apple.
You could already do it.
You can already do it.
But it's not widely understood.
Well, I was going to say, I don't feel like that is as exciting as, oh my gosh, Apple was 450 and now it's 100.
If you're like walking around with an ice cream cone and then suddenly you get 4 ice cream cones, you appear to be richer in ice cream. Like it does make you feel rich. It does make you, right. It does make you feel richer. Yeah. It makes you feel, it is like, it's like getting something for free that you didn't have to buy. There is this psychological component. So what happens to the chart? Does the chart suddenly drop to 100 or 115? What happens? Or does the whole thing gets reset?
So what will happen is it will look like a big gap down to the low 100s, and there'll be this gap on your chart. However, most charting services automatically adjust for the stock split. So what will happen, like I have some services where you can adjust or unadjust. So you can see, oh, Apple was 450 before the split, and they open the next day and they're way down here, low 100s. What most programs and your broker will do is they will show now after the split, it'll all look like 100 and something. This price of 455 it'll actually be adjusted for that split. So you'll see it closer to the low 100s actually after the split.
Okay, so it'll
automatically,
the patterns will look exactly alike, but this will be $50 a share,
right?
And this will be like $115 a share. Like it will just, the whole thing will readjust. The pattern will remain. The moving averages will stay.
It's just the numbers on the right side that completely will be like divided by 4. And that's going to be what you see on the price. If you ever cared to see the pre-split price, right, that's where you could, and I think programs you can go in, most of them, and unadjust is what they call it. And then you can see, oh, Apple was 400. It doesn't really matter because it's in essence the same exact thing.
That is totally fascinating. I think that so then in the end, on the basis of the split alone, not even accounting for any fundamentals about Apple, this is obviously a trend. It just keeps gapping up even. On the basis of the split alone, is it justifiable for someone out there that plans to hold Apple for 10 years, like a long-term trader? We'll just use me as an example. I'd love to hold a stock for 10 years. Is the split that's coming sort of a really good idea? It's a catalyst for it's like, now's the time, Rob, if like this is the time to do it.
Yes.
Because you look back on it, you're like, if I had just bought it before the split,
right,
I could have gotten just the boost that comes from the split itself.
Exactly.
Yeah.
Yeah. And as far as that goes, you look at where in March, Apple was 200 or so, and think of how many people are saying, oh, if I had just bought it at 200, well, now they're going to have that chance to buy it in the low 100s. So that does just automatically bring in more buyers just because of that.
Well, and it's a drop that isn't related to a bad announcement.
Right. It's nothing
so
but
it's
good.
No wonder. It is like, it will be the center of everyone's attention for 4 or 5 days on business television. Where Apple goes from its split, it will just be reported on nonstop.
Yeah, and this will be really interesting because we know how it played out in the 90s in a Super Bowl market. Well, we're in a super bullish market right now with most stocks still, especially tech. So, you think it should play out the same. But regardless, even if it takes a little bit longer this go around, there still is that Apple is a bargain now. Same thing, but it's kind of viewed as a bargain psychologically. So it's a cool one to watch for sure. Yeah,
that is real. No other, I don't know of any other, I can't think of any other stock split of significance anyway.
No, most of them in the last, 10 years have been reverse splits, right? Where it would be.
Where Apple says, we're going to give you a half a share that's double in value for each share that you have. What are they doing? Are they artificially increasing the price of their stock?
Probably. And it's typically stocks that aren't performing well do that. And I don't know if they're trying to lower the float. So they're, the way stocks move it really is supply and demand. So if you have more supply or more shares of stock and less demand, the price doesn't move much. That was Microsoft forever. Massive supply, not a lot of demand. So when they do the reverse split, they're decreasing the supply by, a third or a half or whatever, double. And then there could be more to it than that. But what I see is they feel like, okay, our stock isn't moving. We're going to make it look more valuable by doing the reverse split. So now the price is higher. And also we've decreased all that supply. So it's easier for the price to move, up and down along. That's
really interesting. I do look at some of these. This is Booking Holdings. It's a travel. I think they own booking.com or whatever. This is a $1,815 stock. It's like a $1,815 stock. I sometimes wonder, like, what's the purpose of this company having its stock price so high? And I think maybe it's to discourage reckless speculative trading in the stock. Like, I guess it certainly just discourages me from ever buying a call or a put or doing anything here. Whereas Apple seems to have taken the reverse notion, which is we want more participation. We want a wider group of people in the world to have access to the stock. Like everyone should own, like what's going to happen is the sheer number of people who own Apple will become greater because it's just cheaper to do it.
Yeah, very likely.
So it's really interesting.
Can I show my other favorite?
Oh yeah.
I mean, this is just, it's Amazon. Whenever you talk expensive stocks, you have to look at Amazon, and they have just priced out so many people now.
I don't know how many times I promised my friends I was going to buy Amazon in March. Well, if Amazon can fall, I'm going to buy it. And then Amazon fell, and then it recovered to like 1900. And I thought, oh, it's at 1900. I can't do it. I feel like Amazon's going to get, like, if you want to speculate about, stock splits and stuff like that, I feel like Amazon's going to get broken up.
Yes.
Like if you want to play out a scenario where, what do they, I don't want to do any political stuff, but they call him like Uncle Joe, what do they call Joe? Sleepy Joe, whatever. So if Joe Biden gets elected,
you think he'll break
you can never guess who I'm going to vote for. So I'm not even going to go there. But like if Joe Biden gets elected and the Justice Department is staffed full of antitrust lawyers who want to break up big companies, Amazon's like number one on the list. Yeah. Amazon is the poster child for the whole world is falling apart. And Amazon's like, we're drying our tears with our $1 billion bills. Yeah. Like they have so much money.
Right. Well, and to that point, not to talk politics again, however, we have discussed that I believe this election is, it's between capitalism and, free market and less regulation and lower taxes, and then more socialism or even beyond, that is higher regulation, higher taxes. And I mean, that's what is stated, right, from the party members. So that's what we're looking at. So if there is higher regulation, it does statistically decrease the value of stocks. It does take a stock like Amazon that basically runs the world now and breaks them up. Absolutely. So,
well, it is like we're 100 years out from, we're 110 years out from the breakup of Standard Oil, or 100 years out from the breakup of Standard Oil and the trust busting that happened. And Standard Oil got broken up into, Mobil and Standard, Exxon, it got broken up into all these companies, and then Exxon merged with Mobil, and it's 76, and all these companies, they had all these companies spread out, and then they all reconverged. But what happened was, initially fought it, Rockefeller then supported it because he realized he was going to own shares in 10 different companies, and then they all became more valuable. It's the same concept.
It's like a stock split.
Like if almost. Amazon got broken up into web services, e-commerce, and food,
you would want pieces of all of that.
All of them.
Exactly.
And then they would just go on a buying spree. Did you hear now they're turning a number of Sears stores vacated in the malls into Amazon distribution centers? Yep. I think that this is a company, I don't actually think, there's a point at which it doesn't matter, because Trump doesn't like Jeff Bezos, because, the Washington Post doesn't really care for Donald Trump. So I think this is not a stock split, but it's a company split. This is looming, 5 years out, like the odds favor that Amazon becomes 3 different companies.
And honestly, if they do, there is a very good chance that it will play out exactly like a stock split, post-stock split.
Because it won't have been broken up, and it will get all the it will be the #1 news story.
Exactly.
For as long as it takes.
Yeah, and it's the same thing. If you own Amazon stock and they split it up, you're going to get all the other pieces of stock.
Own a share of all those other companies. It's crazy.
Yeah, or you buy it when it's cheaper and already split. So all sorts of opportunities for sure.
Do you mind if we look at gold for a second?
Let's do it.
So gold's I don't think gold's having a good day. I'm not sure.
It's not.
I'm not sure. So this is the continuous gold contract not having a good day, but is there a silver lining on the beating that it's taking today? I mean, it is really getting worked. I don't know what is behind this, but
I love it, because this is the kind of trade where you look at, and if you are bearish today on gold after this massive drop the last couple of days, this is not the time to be bearish. Now that the put side looks really, really great, it's too late. I start looking at coming down to support levels.
Yeah.
And wondering, is this going to bounce? And it may not, but we're back at a level that I don't like being bearish this late to the game. I think you wait and actually see, are the buyers going to come in now that it's taken this big hit?
Yeah. Well, and it's right on top of a level of support right now. Like if someone were out there waiting for a day or time to buy gold, that you got it, like today's that day.
And it is almost a 50% retracement from this last rally where they took off. And that's just a strong technical retracement level.
So we can do some Fibonacci voodoo magic. So we take the low, the high here that became the resistance that became support. And we're right near that 50% retracement
It's pretty
level.
close.
Yeah, that's interesting. If we go, I wonder if that lines up with, that level is 1939. It doesn't, it lines up with an old area of support and resistance, but not much else. Yeah. Like we could be like this thing, it's like one of those things like, oh, it's still too expensive. And then a year from now,
Yeah.
after the Federal Reserve and the Treasury have printed $3 trillion more dollars.
Yeah. Well, Amazon was still expensive in March at 1900 and now they're over 3,000. So yes, there is that.
Exactly. Exactly. Wow. Is there, you mind if we look at the NASDAQ? I know some people watching here. So the NASDAQ's down on the day, but so is gold. Like, aren't those supposed to be inversely correlated?
Not as much as they used to. I think years and years ago, they were always inversely related, but now it just depends. And the way gold moves also has to do with the value of the dollar. It's not just the price of gold. So you'll probably know more about this than I do, but I know that that makes gold move differently. It's not always inverse. And same, we have tech stocks, same thing, a pullback for the last few days.
Dollar's up a bit today.
There we go.
Dollar's kind of stationary or whatever. That's interesting. Yeah, that gold is wicked. That's a wicked retracement. That's like people long gold are taking a real beating today.
Yeah.
But you know, if you believe that it's a store of real value, then you're getting the best buying opportunity that you've been able to get in a long time. Did you know gold and Zoom somehow seem to be correlated? Doesn't seem to make any sense. But that's extraordinary. Zoom's getting just hammered. That's bad. That's bad times for Zoom bulls. If you're out there and you're getting hurt by that, I feel bad. Any last words before we wrap this up and give everybody a link to stay in touch with you? And
yeah, just look at the charts because Zoom actually turned bearish 4 days ago just on the charting. So that'll help you avoid some of these where the stock breaks down against you. That and then adding in the things with the technicals and the fundamentals and just to help ensure that you're on the right side of the trade. Super important.
All right. So Marquet, you've got the 1K Club.
Yeah.
I'm going to put a link up here on the screen.
Cool.
You can see it on the screen right now, folks. It's right here on the chart. Can you tell us a little bit about the 1K Club? And then I'll show them what the page looks like.
It's great. It's a fun club. We got a bunch of traders coming in, a bunch of new people all the time. And it's a great place for me to throw out a bunch of education and technicals, charting education. So when you sign up, there's a whole members area that will have these little lessons on candles and indicators, and we're putting new ones out all the time. And so I would say join, you'll get a trade call a month. The whole point is how to get everybody making a minimum of $1,000 a month without putting in gobs of time, 30 minutes a day. And in addition to all of that and your trade calls and information on what's happening in the market and what's upcoming, you get all of those lessons and access to them. So check it out.
That's absolutely fantastic. Here's what the page looks like when you go there. You'll get all the details on trades. You'll get all the information on what you get, the 30-minute day trading blueprint, the 30-minute trading day masterclass, the best trading idea of the month to make an extra $1,000, urgent updates, the market breakdown, the peek over your shoulder videos that I helped you actually do last time you were here, personal customer service team, a 365-day money back guarantee. If there's like literally all the risk is on us, exactly where it should be. And all the benefits accrue to you if things work out. So check it out at robbooker.com, the 1K Club.
Did you tell them how much it was?
It's a big secret because I don't know how much it is. I would buy it for $1,000 a year. Is it $1,000 a year?
No, it's $49 a year. So it's keeping it super, super low and reasonable. Come hang out with us.
Yeah, that's amazing. Okay, everybody. Thanks so much for being here. Thanks for spending some time for the equivalent of $4.10 a month or whatever. You can join Marquet, trade together with her with the goal of making an extra $1,000 a month with just a few minutes. Go to robbooker.com/the1K Club. It's right there on the screen. We really had a great time today. We're super happy that you're here. Thanks, everybody, for joining us, and we'll see you next week.
Thanks, guys. See you.
So I guess I'll just mute the microphone and then we'll leave this up for a few minutes for
Oh, go
everybody.